A real estate closing is a mechanical, strategic process. Successfully navigating the final week requires the mindset of a pilot in command, steering through turbulent storm clouds into clear skies. At this stage, you face specific operational hazards. You must account for physical property defects, surprise fee increases, sophisticated wire fraud attempts, and permanent legal title errors. Execution depends on a strict set of prerequisites: a clear-to-close status, your initial loan estimate, the final closing disclosure, a verified escrow phone number, and 2 forms of photo ID. Adopting a mindset of cold, professional execution is the only way to protect your capital and claim the asset. The 48-hour final walkthrough is a verification step, not a new inspection. You are confirming the property is in contract condition and that the seller has completed all agreed-upon repairs. If you discover a new physical defect, like a broken water heater, the transaction requires an immediate mechanical adjustment. Patiently, avoid the instinct to yell at the seller or your agent. Anger is an emotion, not a strategy. It only serves to delay your closing date. Instead, instruct your agent. Draft an addendum requesting a credit in escrow for the repair to be paid from the seller's proceeds. This chart shows how that addendum functions. It mechanically detaches a specific block of funds from the seller's total proceeds column. The escrow officer intercepts those funds during disbursement and credits your side of the ledger to cover the repair costs. Using a standard legal addendum ensures the deal closes on time, without forcing you to absorb the cost of the seller's maintenance failures. 3 days before signing, your lender will provide the final closing disclosure. You must compare this line by line against your initial loan estimate. This comparison focuses specifically on Box A for origination fees and Box B for third-party services. These specific fees are subject to a 0% tolerance limit. Under federal law, they cannot increase by a single penny between the estimate and the final receipt. If a fee in Box B has increased, do not call your mortgage broker to complain about the price. Email your loan officer. Please provide the official change of circumstance documentation justifying the increase in Box B fees, as this exceeds legal tolerance limits. Terms like change of circumstance and tolerance limits are the regulatory triggers for federal TRIDE rules. This vocabulary alerts the lender's legal compliance department that a violation has occurred. To remain compliant, the lender must cure the variance out of their own pocket. Wielding this precise vocabulary makes you an effective compliance auditor. You are forcing the bank to correct the ledger before you reach the signing table. The most dangerous moment is transferring your cash to close to the title company. Cyber syndicates monitor real estate communications. They send emails disguised as the title company, providing fraudulent wiring instructions to reroute money into their own accounts. Never initiate a wire transfer based solely on an email notification. Funds sent to a fraudulent account are unrecoverable. Physically dial the escrow officer using the number on your original paper documents and read the routing digits out to confirm every number. An analog vocal loop is your only foolproof defense against digital financial ruin. The closing appointment is a 45 to 60-minute endurance test. Expect to sign dozens of secondary disclosures, tax forms, and compliance affidavits. The notary public in the room is a state-commissioned official with 2 legal functions: verifying your identity and witnessing your signatures. They are legally barred from practicing law. If they refuse to explain your interest rate or loan terms, they are simply following the legal boundaries of their role. The most critical document on the table is the deed of trust. This instrument secures the loan against the property in public county records. If you find a typo in your name, do not allow the notary to cross it out with a pen. A blue ink correction on a recordable legal instrument creates a clouded title. Years later, when you try to sell, the county computer system will flag the identity mismatch and the transaction will stop cold. Fixing a clouded title after the fact requires a quiet title action in court. It often takes months and costs tens of thousands of dollars in legal fees. Ignore the social pressure to keep the appointment moving. Demand a newly printed, error-free document for any misspelling. Those extra 20 minutes at the signing table prevent catastrophic legal liabilities in the future. Once the wire clears and the keys are issued, the transaction is complete. You have bypassed the panic traps and secured a flawless public record. By utilizing these precise mechanical levers, You have successfully operated as the competent, cold-blooded director of the transaction. This same executive precision will be required again to execute a streamlined refinance when interest rates drop. Understanding these mechanics provides control over the closing process. You leave the table with a secure asset and a flawlessly executed contract.